speaking. I'm sorry.
Oh, that's all right.
Hi, my name is Siti Aisyah binti Yazid.
Hi, my name is Nur Husna binti Hamdan.
Assalamualaikum and hi everyone. My name is Nuralisha Amira binti Wazili.
Hi, my name is Numaizatul Ahmad binti Suhaimi.
Okay, now I am Husna again. That will answer for part A, question 1. It's about introduction to MFRS 8 operating segment. So, MFRS 8 operating segment was introduced by the Malaysian Accounting Standards Board, or in short, MASB, in 2009. Basically, operating segment is to disclose details about the different parts of a business that companies are required to report. Now, we take a look to the types of companies that need to include operating segment. First is public traded company. Second, companies that are in the process of issuing securities. And the third is companies that voluntarily provide segment information. Now, you must be wondering, why do we need to provide this operating segment in our report? So this is to help the users of this information to better understanding the entity's past performance, better assessing the entity's risks and returns, and make more informed judgment about the entity as a whole. That's all for the objectives of why we do need to provide this operating segment. I think that's all for the introduction. Next, I'm going to pass the slide to Aisha.
What is CODM? CODM stands for Chief Operating Decision Maker. It's a functional role within an organization. It is not a formal job title. CODM refers to the person or group of people who have the ultimate responsibility for making strategic operating decisions. Who can be the CODM? First, Chief Executive Officer CEO, Chief Operating Officer COO, Executive Management Team, and Board of Director. And what is the responsibility of CODM? First, to allocate resources. CODM will decide how to distribute financial and operational resources across business unit. Second is performance assessment. They will review financial results of different segments. They will compare actual performance against targets. They will identify which segments are profitable or underperforming. Third is defining operation segment. Lastly is strategic oversight. They will guide long-term direction of the company to ensure alignment between business unit and overall corporate strategy. And why CODM is matter? CODM is matter to ensure transparency in financial reporting, especially for the investor. Second, help stakeholders understand how management view the business. Third is provide insight into which part of the company drive performance. To simplify, CODM is the strategic brain of the organization of the operation. CODM decide where resources go and how performance is judged. One of Genting Malaysia CODM is Tan Sri Lim Kok Tai, which the Deputy Chairman and Chief Executive or Non-Independent Executive Director, and Datuk Sri Lee Chong Yan, which is a President and Executive Director of Genting Malaysia. Meanwhile, for UEE Holding, one of the CODM is Datuk Dr. Ting Kok Hua, Managing Director, and Hin Wai Min, Executive Director of UUE.
So for the question 3, for part A, there are two types of segmental report. First is geographical segment, where according to MFRS 8, it is a disclosure requirement for entities' revenue and non-current assets by geographical area, including the country domicile and foreign country. Factors need to be considered is the relationship between operations in different geographical area and exchange control regulations. And the second type is the business segment, where a financial reporting practice engage in individual product or service or group of related products that subject to risk and returns. Factors that need to be considered when doing the business segment are the nature of product and services, nature of production processes, and nature of regulatory environment. Now let's take a look at the snippet of operating segment in UEE Holding Berhad's report. The group's geographical revenue is derived from two key markets, Malaysia and Singapore. These figures represent sales of HDPE pipes to external parties. Malaysia remains the dominant market, contributing 52.563 million ringgit for the quarter and 83.888 million ringgit for the years to date. And then compared to the previous year, this reflects a robust growth of 52% for the quarter and 27% for the cumulative period. In contrast, revenue from Singapore declined to 5.108 million for the quarter and 6.187 million for the period to date. This marks a year-on-year drop of 39.7% for the quarter and 61.1% for the cumulative period. Overall, total revenue from both markets amounted to 57.671 million ringgit for the quarter and 90.075 million ringgit for the year to date. While Malaysia's performance has tightened significantly, there is a decline in Singapore. Okay, this is for the business segment. In the operating segment, in the report of UEE Holding Berhad, the group's revenue is derived from three core business segments: underground utilities engineering solutions, manufacturing and trading of HDPE pipes, and engineering, procurement, construction and commissioning, commonly referred to as EPCC, of solar photovoltaic system. Okay, now let's begin with the underground utilities engineering solutions. This segment continues to be the group's main revenue driver, contributing to 52.285 million ringgit for the quarter and 80.395 million ringgit for the year to date. Compared to the previous year, this represents a strong growth of 47.6% for the quarter and 16.5% for the cumulative period. The increase is largely due to expanded project execution and improved contract margins. And then the next is the manufacturing and trading of HDPE pipe segment, recorded to 4.697 million ringgit for the quarter and 8.991 million ringgit for the period to date. This marks a decline of over 30% compared to the previous year. In total, the group achieved 57.7 million ringgit in revenue for the quarter and 90.1 million ringgit for the period to date. This represents a year-on-year increase of 33.9% and 98% respectively. The growth is driven primarily by the utilities segment and supported by other business.
Segmental reporting plays a vital role in enhancing transparency and strategic decision-making within an organization. Two major benefits segmental reporting is enhanced understanding of business diversification. Segmental reporting reveals how different business units contribute to overall performance. This allows stakeholders to identify which segments are generating value and which are underperforming. By highlighting the strength and weakness across operations, it supports better resource allocation, performance, evaluation, and strategic planning. Second, insight into geographic and economic exposure. When segmental reporting includes geographic breakdown, by providing valuable insight into how a company's performance is influenced by different economic environments. This helps users assess regional risk, understand market dependency, and evaluate the impact of external factors such as currency fluctuate, local regulation, or economic downturn. It's especially useful for multinational companies operating across diverse markets.
FAR570 Interim Financial Report was introduced by Malaysian Accounting Standard Board in 2012. It is to prescribe the minimum content of an interim report and recognition and measurement principle for the interim period. There are certain types of companies that preparing interim financial report. First of all, publicly traded companies, all public companies, including non-listed companies and private companies that are subsidiaries of public companies. Interim financial report was prepared to provide an update on the most recent annual statements, focusing on significant changes. It includes condensed financial statements and selected explanatory notes, and must disclose the items that are material for some period. Interim financial report also apply the same accounting policies in the annual report, and we need to prepare interim financial report to ensure that listed companies provide timely, relevant, and consistent financial information to the public between annual reporting dates. Two significant events and transactions that affect an entity's financial position and performance since the end of the last annual reporting period. First of all, changes in composition. Changes in composition in general involving adding and removing entities from the parent company's control, affecting consolidated financial statement by altering assets, liabilities, revenue, and expenses. For example, Genting Berhad acquired remaining 51% membership interest in Genting Empire Resort on 31st May 2025 and acquired Stafford, Genting Casino Stafford Limited and Genting Management Service Limited on 8 April 2025. The impact on financial position. The transaction resulted in the provisional of the goodwill of 1,051.1 million. This contributed to the substantial increase in intangible asset from 4,821.1 million during December 2024 to 6,143.6 million during June 2025. The balance of associate decreased significantly as Keril was fully consolidated. Impact on performance. The acquisition resulted on loss of deemed disposal of associate 13.3 million, recognized in profit or loss account for the period due to the remeasurement of the previously held interest to fair value.
Another significant event and transaction that affecting financial positions and performance since the end of the last annual reporting period for Genting Berhad, according to MFRS 134, paragraph 15b, clause H, which refer to changes in business or economic circumstances that affect the fair value of financial liabilities. For example, according to Genting Berhad's second quarter report of 2025, on 28 April 2025, the subsidiary Penirut Berhad under Genting Plantation Berhad have made the issuance of Sukuk Murabaha and Sukuk Wakalah amounted to 800 millions of Islamic medium term note, consisting of 500 millions of Sukuk Murabaha and 300 millions of Sukuk Wakalah. This event making the total liability of Genting Berhad increase under the long-term borrowing in statement of financial positions. Moreover, on 5 June 2025, Penirut Berhad redeemed 1 billion of Sukuk Murabaha, hence reducing the liability of Genting Berhad and improving its debt to equity ratio. These issuance and redemptions will also have an effect on financial performance, such as the company finance costs. Since issuing new medium-term note can add profit or interest expense, while redeeming all sukuk may reduce future finance costs. These changes directly affect profit before tax and the company's overall profitability for the quarter. This can be seen on the information on second quarter report of 2025 on Genting Berhad. Genting Berhad is using quarterly interim period, which the duration for each quarter is 3 months, such as the first quarter started on 1st January 2025 and ended on 31 March 2025. The second quarter started on 1st April 2025 and ended on 30 June 2025, and so on. The current period for statement of financial positions of Genting Berhad is as at 30 June of 2025, while the cumulative period is at 31 December 2024. And statement of changes in equity for current period is 1st January 2025 until 30 June 2025, and cumulative period is 1st January 2024 until 30 June 2024. Meanwhile, the current period for statement of cash flow is on 1st January 2025 until 30 June 2025, while the cumulative period is on 1st January 2024 until 30 June 2024. This is Genting Berhad's statements of financial positions, cash flow, and changes in equity.